What's happening, everybody? Happy New Year! It's your boy, Sean McLaughlin, at Options Sean on Twitter X. Today is January 4th, 2024, and the new year is off with a little bit of shenanigans. This is what I was worried about last week. You may remember me talking on the morning show. We probably talked about it in the jam session last week. The new year always has funny surprises in store for the market. You never quite know what you're going to get, and you generally get. I like to compare it to a Fed announcement day. Like, you know how, like, when the Fed has their decision on interest rates on a Wednesday usually, and it happens at 2 o'clock Eastern, and the whole market just kind of waits for it, and then when it happens, market goes all over the place, right? It goes up, it goes down, it goes up, it goes down until it finally eventually figures out a direction. Well, I feel like the week after New Year's is kind of like it's a stretched out version of that, right? We're going to be up, we're going to be down. I don't think we're going to get any clear indication, or we don't have any clear indication yet. So yeah, it's a soup. But anyway, this is the All-Star Options Jam session. Let me put that slide back up. And what we do here is this: we review action in any of the trade ideas that the All-Star Options subscription service has put out. I show you any exits that we've taken, whether it was a profitable exit at a profit target or a stop loss, any adjustments that may be needed for a trade. Then we also update stops on some existing positions. I show you that. And then we quickly touch on any new trades that we've entered since we last spoke last week. We do this every Thursday, noon Eastern. So if you're new here, welcome. Hang out with us every week. All right, but before we get into all the charts and all that, I have to drop the old disclaimer. Everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. All right, so as always, we start at the top. We get a little high-level overview of where we're at. And here's the S&P 500. And no surprise, the market has run into a little bit of trouble here at this level here around 475. Corresponds with the high back in the fall of 2022, right? We're not quite breaking out to new all-time highs, but we're close. And it's not a surprise at all, certainly not to me, that we do chop around here. Does this mean that this is it and this is the ceiling? I don't think so. But when do we break out above here? I don't know. It could take weeks. It could take months. I don't know. But no surprise we're running into upper resistance there. Volatility index, you can see here how it's trending. We're at the lowest levels since COVID. This spike here in 2020 obviously is when the market freaked out due to COVID and the whole world freaked out due to COVID. We have basically retraced all of that fear level back to pre-COVID levels, back in a simpler time, back when we all breathed easy, so to speak. All right, so that's where we're at, broader market. Now, let's get into some positions. We had 3 exits today. Mixed bag on these. No great news, but no terrible news either. We'll start off with the good news. Adobe. This is a position we got into back on October 11th. We did a bullish risk reversal. We sold the June 460 puts, and we used those proceeds on selling the puts to purchase the June 700 calls. When I put the trade on, I was left over with a $1 net credit. That's important because now, today, or actually I should say yesterday, Adobe closed below our updated stop loss level. Our stop loss was at 578. We updated that stop back on December 7th. Actually, no, we updated more than that. There's a more frequent than that, more recent than that. But we did update the stop. The stop was 578, and we closed below it yesterday. And when the market opened this morning, we still remained below 578. So I pulled the trigger and got out of the trade. But hey, guess what? Even though it was below our stop loss level, and even though the stock is, barely above where we entered back on October 11th, we actually exited this trade with a profit, because today's exit, when I purchased to close the 460 puts and sold the 700 calls, I got a $2 credit for that trade net, right? $2 today plus the dollar I collected back on October 11th, and when we put the trade on, means that we're walking away with a $3 profit on a trade that didn't work. Gotta love that, right? Not every trade works out that way, but with a risk reversal, this is something that is possible. It's one reason why we like risk reversals when the conditions are right. And in this case, hey, trade didn't work, but we still made money. Gotta love it. So, yeah, sunny side, silver lining to that picture. Autodesk did not work. Also did not work, but this one we did lose money, but not a lot. We entered back on December 13th, we entered a bull call spread in June. We bought the June 230 calls and sold the June 280 calls. We paid $17 for it. And believe it or not, today when I got out for like 15 and change. Let me confirm that. Autodesk. Yeah, I got out for $15.50. Not bad, right? All things considered. $15.50 on that exit. So flesh wound, right? No big deal. No big deal. But we're out of Autodesk, ticker ADSK. All right. The third and final exit this morning was in Chewy. Now, you may recall when we put this trade on, we didn't put this trade on that long ago, just a week ago, heading into the new year. This was also a risk reversal, but I mentioned, in fact, in this trade, when we talked about this trade, I mentioned that I was concerned about New Year's shenanigans, like I said at the top of the broadcast here. Weird things happen sometimes at the beginning of the new year, and I was worried that this is one of those names that could have a quick little sell-off after the new year. And sure enough, look at that. We certainly did. But we took a little bit of sting out of that reversal by we modified this risk reversal. The typical structure for risk reversals, we shorted the June 22 puts and purchased the June 30 calls, right? But there was a little credit left over. There was about 25 cents credit left over from that part of the trade that we used those 25 cents to purchase January, that expires this month, January 21 puts. Those cost us less than 25 cents. So all in, the whole trade cost was basically zero. But those long January 20 puts took the sting out of the loss a little bit. We made money on those puts, not a whole lot. We made about 75 cents, 80 cents on those puts. Like I said, we paid about, I think we paid like 23 cents for it, 24. Got out for about $1 today. So that took some sting out of the rest of the trade. All in, the net loss on this trade was $2. Not terrible. But hey, we lost $2 on Chewy. We made $3 on Adobe. And we lost $1 on Autodesk. So basically we're lukewarm today, or basically not a big loss at all. Just a whole bunch of nothing. But we've taken risk off the table, which I guess that's important. All right, now I've got 3 more charts that I want to show you. Is it 3? Yeah, it's 3 more charts. These are positions that need our attention. We're still in them, but there's a good chance we'll be getting out of them tomorrow. Eli Lilly's at the top of the list. This one I feel most strongly we'll probably be getting out of tomorrow. This is a bearish trade, a rare bearish trade that we put on, a bear put spread. We're long the April 600 puts and short the April 500 puts. We paid $35 to get into this trade. Our stop loss is 620. And as you can see today, this is today's candle. We are above 620, comfortably above 620. It's a defined risk trade, so I'm not panicking for the exit here. But if we do finish the day, I mean, we have a lot of day left here. We got several hours. The market's pulling back a little bit. Who knows? Again, it's New Year's week. Shenanigans. Lots of weird things happen. But right now, if Lilly closes above 620 today and remains there at the open tomorrow morning, then I'll be exiting this trade. I'll be taking the loss. Not a huge loss, thankfully, but we'll be taking the loss and moving on because that trade is definitely not working for us. Next up is Datadog. This is a bull call spread. We're a bullish trade. We're long the July 120 calls and short the July 150 calls. We paid $9.90 for it. We got into this trade not too long ago, last month for sure. But our stop loss level is 112. We traded below 112 earlier today. I'm going to give you real time where we're at right now. It's back up above 113 right now, about 113 and a half. So this one might live to fight another day, but 112 is our stop loss level. If we see a close below 112, whether it's today or sometime next week, then we will be closing this trade and moving on. But right now, it's trading, like I said, 113 and about 50 cents. So it may live to fight another day, but just keep that one on your radar if you're in that position. So we certainly will be. Similarly with Amazon, we're in a bull call spread with Amazon. We're long the July 150 calls and short the July 180 calls. We paid 1080 for it back on October 22nd. This chart does not include today's candle, but we did trade below 144 at one point today. So it's on my radar. I think we're back above it right now. Barely. We're at 146 right now. Amazon's coming back for us. So Amazon also may live to fight another day, but keep an eye on this one. We certainly will be. If we do see it close below 144 today, then we will pull the trigger and exit this trade tomorrow. But, fingers crossed, hopefully these things survive. And it's just, a typical New Year's week where weird things happen. And the bulls will resume their footing and take some of these positions higher. That's the hope. That's the bet we're still making. But hey, only price pays. And if these stocks close below our levels, we're not going to argue with the market. All right, that's it. Oh, that's it for things we need to pay attention to. Now, I do have one or two updated stops here to talk about, or stops we need to be paying attention to. Palo Alto. So this, we're not updating our stop, or we are updating our stop because we are approaching expiration. We are in January 250 calls we paid $14 for. Now, here's the good situation with Palo Alto is that we're in a no-lose situation here. We're likely going to walk away, or we are going to walk away with a win unless something crazy happens. But we got into this position back on June 6th or June 2nd. Okay, you can see right here. And we bought the January 250 calls for $14. Our trade plan, as we published it when we got in, was to sell half of our position if we got a double in the price of the options. We did get that double back on November 28th, right here during this breakout in late November. This was Thanksgiving week, I believe. We did get an opportunity to sell half of our calls for $28 a contract. So the good news the good news now is that we can't lose in this trade. Worst case scenario, our remaining January 250 calls go to zero, and at least we walk away unscathed. I don't see that happening for us because here's what's going on. Because we're approaching expiration, I am trailing a very tight stop on this position for the rest of, what do we have, 2 weeks until expiration? I'm going to trail a 3 to 5 day stop, or I'm going to trail a stop below the 3 to 5 day low. I'm going to use a little discretion, as I always say. But basically, I'm going to look at the chart every day, and whatever the low is, the recent low from the last 3 to 5 days, that's going to be my stop. And assuming nothing crazy happens, if we break below that stop, then we'll sell the calls, and whatever we sell them for, that's all profit, right? That's great news. That's all profit because we already took out our risk capital back on November 28th when we sold half of our position. So whatever we sell these calls for, and assuming we don't have a, colossal collapse back to October lows, like an overnight gap, we should be able to definitely get something for these calls. Right now the calls have about $35 of extrinsic value or intrinsic value. So if we were to sell them right now, we'd get $35-ish approximately. I don't have the prices in front of me, but this one should be a profit. Great news for any of you who got into this trade with us. Certainly great news for us. We're very happy. All right, the next one that also expires in January is Peabody Energy, ticker BTU. We've been in this trade since July. Got into this trade when I was in Asia. July 21st to be exact. The trade really hasn't worked for us, but neither has it stopped us out. We're long the January 25 calls. BTU is trading, this chart doesn't reflect it. We're actually up above 25 right now. BTU's had a pretty good day. So our calls are in the money, barely, okay? But same story with Palo Alto is that we are going to be trailing a stop loss below the 3 to 5 day low. And right now that low is 24. So for now, the stop is 24. Any close below 24 will get me out of BTU. At that point, probably definitely a loss. Won't be a huge loss, but it'll be a loss. But hopefully BTU follows through on today's breakout. We're at a new 2-month high today, above 25. So hey, maybe this thing has something in store for us, little fireworks into expiration. That would be nice. So maybe we could scratch a little gain, or at least not take such a full loss on this trade. But that's it. That's where we're at now. Our stop in BTU is 24. And by the way, guys, for those of you All-Star Options subscribers who are in our chat, by the way, the chat's available to everyone who's a subscriber of All-Star Options. I will update the stops in the chat throughout the next coming weeks on these two trades, on the Palo Alto and the BTU. I will update the stops in there so you guys are fully aware where my stop is at all times. Okay, I believe that's all we got. Oh, sorry, one more. I forgot. Ooh, KeyCorp. This is a trade we got into on December 7th. Yeah, December 7th. We bought the July 15 calls for 90 cents. It's starting to work for us. Today, not looking so great. Actually, it's coming back today. This does not include today's candle. We're back above 14 and a half right now, or approximately 14 and a half. But I've moved my stop up. The original stop in this trade, I believe, was 12 bucks. I've moved our stop up to 13, basically below this support level here, which was also a resistance level coming out of the little mini regional banking crisis that we had earlier last year. So this is a significant level. Any close below 13 gets us out of KeyCorp. But so far it's working. Let's let it dance, as JC says. All right. And finally, I don't have the new trade slide. Oh, there it is. There's a new trade slide. New trades enter this week. So we've entered one trade since we last spoke. It's in Pfizer. Me and JC and Strazza talked about it on the morning show this morning. You can find the morning show on our YouTube channel, Stock Market Media YouTube channel. I come on the last 15 minutes of the show. We talk about Pfizer. It's a bullish bet. We're doing a bullish risk reversal here. You get all the details there. We think Pfizer can be a good catch-up trade to catch up with some of the other bio or healthcare names that are really ripping, like Amgen and Merck, that have had a great start to the year. If Pfizer can get ahead of steam, it's got a lot of runway to get back to highs. I'm not saying it gets there, and it doesn't need to get there for us to make money, but if it does, whoo, boy, we're setting up for a big winner. But we think that this was a little fake down, breakdown, as they say, and the over-aggressive bears are going to get caught off sides. All the details can be found on our website, allstarcharts.com. Go to the members section, go to the options section. You'll find all of our trade ideas there. The Pfizer trade idea is open for everybody, so anybody can read it. All right. Thanks for tuning in, everybody. The new year is off to an interesting start for what is sure to be an interesting year. No doubt about it. Guys, if you have any questions about anything we discussed here, or if you want to get hooked up with All-Star Options, you want to join the community, shoot us an email, info@allstarcharts.com. We'd be happy to have you. Until next week, until next time, I'll talk to you then. See you later, everybody.